What we need to be paying attention to here is that markets have now rallied back above the 50-day moving average. That's good news, right? So that's bullish. But sitting right above this is the 200-day moving average, and now you've had this very long streak. The number of stocks that are above their 50-day moving average is now back to 90%-ish. Normally, when you get a very high ratio of stocks trading bullishly, that typically tends to be the peak of a rally. Here's what you need to know before the bell. Today's article on the website is called "Resistance is Futile." I've been on a Star Trek binge lately. I did Spock, the Spock's Rules of Investing last week, so we're talking about resistance is futile today, which was a line from Star Trek when they were fighting the Borg. Anyway, that article is on the website this morning, but resistance is important because it applies to both the upside and the downside in the markets, and this is where we often kind of get distracted by markets when markets are going through a decline like we were. Of course, we had Liberation Day. We had this very sharp sell-off in the markets. And that was why on April the 7th, we wrote that article. It's like, hey, we're probably going to find a bottom here and markets are going to start to rally. And that was because we had hit resistance on the downside, right? We call it support, but it's the same thing. It's resistance to prices going lower, just like you have resistance on the upside of prices going higher. So we had this very, very sharp decline. We got more than 3 standard deviations below the 50-day moving average. When you have that kind of deep sell-off, you're going to have buyers come back in the markets. Basically, you exhaust sellers, and then buyers can step in. It doesn't take a lot of buying to start moving prices higher, and as prices start to move higher, that then elicits the chase of stocks going back up. It's like, oh my gosh, I'm missing out. I sold the bottom. I got to get back in. That's exactly what's been happening. Now, we had 9 straight days of an advance. That is the longest stretch of an advance, consecutive days being up in 21 years. So we haven't had a stretch like that since 2004. Now, here's what the important part about this. All records are meant to be broken, right? So again, you have a record of anything, right? You have Usain Bolt, right? He was the fastest sprinter in the world, in history, right? There'll be somebody that actually outsprints him at some point, right? There'll be somebody that can break that record. The problem with records is that is where the peak or the maximum attainment of any issue was done. Typically, once you reach that level, then it's very hard to just keep beating that record over and over again. So it's the same thing in the financial markets, is that when you have these very long stretches, a record was where the market peaked the last time that happened. So the last time that we had 9 straight days of an advance was back in 2004, and then that was it. And it took 21 years to repeat that process again. So what we need to be paying attention to here is that markets have now rallied back to above the 50-day moving average. That's good news, right? So that's bullish. But sitting right above this is the 200-day moving average, and now you've had this very long streak. The number of stocks that are above their 50-day moving average is now back to 90%-ish. Normally, when you get a very high ratio of stocks trading bullishly, that typically tends to be the peak of a rally. So as we talked about in that article on April the 7th, and we talked about in the article today, this is a really good time here. If you didn't like that decline, and you were really getting pressured into needing to do something, we kind of warned you, like, be careful when you feel like you have to do something, just wait. Now's the time to start doing something, right? So this is where you want to rebalance risk, look at your portfolio, add a hedge, whatever it is, because very likely we're going to have some level of retracement here. We're going to have some type of corrective action. That doesn't mean necessarily that markets are going back down to their lows. I'm not saying that at all. But you could come back down here, retest the 50-day moving average, retest this kind of support level that we had going back just, as we had that Liberation Day announcement. There's the potential here for stocks to pull back here a bit, work off some of this overbought condition, give you a better opportunity to rebalance your position, add some equity exposure at cheaper prices. But you can't do that if you don't rebalance your risk here and take some profit. So again, I would really urge you to kind of look at your portfolio, look at things that have gotten really overbought here short term, rebalance that risk, look to add a hedge to your portfolio, whatever it is, because we're going to have some type of give back of this rally. How big that give back will be, I don't know, but it's going to happen. But that's what you need to know before the bell this morning.